Hi, this is Acme with the Bulletin Board Heroes here on Share Talk for Friday, the 24th of April, sponsored by the UK Investor Show. Starting off with the stock which I covered a couple of days ago, but it's just so exciting that couldn't resist it for the end of the week either. The excitement here in terms of the technicals, the way that we've had a second gap to the upside this week, and in these kinds of situations, gaps tend to come in threes, like the opposite of London buses. Top target here at the moment, 110 pence, which is the March resistance line, and that target valid now while we hold above the 70 to 75 pence area, which was resistance on the way up. RSI 81, which is very overcooked, but not as overcooked as it was when we were rallying towards the 70 pence zone earlier in the month. Onto a stock which I've covered a few times and enjoy, particularly on the basis that it's a relatively smooth ride. So DevClever still heading up towards the nominated target at the top of a rising trend channel from the end of September at 8 pence, and that's valid while we hold above around the 5.5 pence level. All the near-term moving averages now rising, which should provide extra momentum for this situation. In fact, one could slightly raise that target towards 9 pence now, given the smoothness of the rally that we've had so far. Stock which has been a difficult situation in the past, but looks as though it's finally coming good at the moment, at least in terms of a potential near-term recovery. We had a break of this falling wedge from December in the middle of March, and that had a bit of traction through the 0.5, 0.7 pence area. Now we've got a triangle break, symmetrical triangle break through 0.55 pence, and while we're above that, looking for initial target at March resistance towards 1 pence. Best case scenario target over the next couple of months as high as 2 pence, filling that gap down from February, hopefully over the near term. On to a stock which I looked at before, but it came back and is now ready to rebound. It would appear Fusion Antibody bouncing off the 50-day moving average, or have a little bear trap below it earlier in the week, and now bouncing today with a very strong green candle off the 20-day moving average at 98 pence. While we're above that, looking for at least 160 to 170, possibly more, given how strong today's candle to date has been. The stop loss could actually be up towards that 109 pence high that was there in March. If you want to trade it relatively closely, I imagine the spread there is quite horrific in these situations. They normally are. On to N4 Pharma, another pharma hero at the moment, and this bouncing off the 20-day moving average in the 5p zone earlier this week. While we're above that, looking for 8 pence, another 8 pence retest, and hopefully a bit more, given this is third time, and we've got a much higher low in place for the shares. You can see that 8 to 9 pence was the resistance on the way down, so maybe there will be a bit more than 8 pence on this particular attempt. On to another pharma favourite of the moment, coming in the form of Omega Diagnostics. Here we've got shares in a bull flag between 30 and 40 pence. Breaking that should at least give us 50 pence, either, well, I suppose not today, maybe too soon for today, but early next week would probably do the trick as far as hitting that resistance line projection from the end of 2015. If you're a fan of the stock and you want to cheer yourself up, there could be a new target after 50 pence as high as 65 pence, which would be that 2015, early 2015 resistance line projection. But let's see how we go for now. At this stage, only back below 30 pence would really cause the bulls to blink in any meaningful way. A new biotech pharma situation to add to the mix has been Scancell Holdings. Here you can see that it's toying with the main resistance on the daily chart at 8 pence. Weekly close above that could open up the doors towards a target over the next couple of months up to 14 pence, and that would be valid while we hold above today's intraday low at 7 pence on the top of the very large overnight gap through both the 50 and 200-day moving averages. Dish of the day, if there is one, just because it's a relatively new situation, comes in the form of TriStar. I've been watching this over the last couple of days. Basically broke that resistance line from March around 13 pence midweek, and now we've broken above the 50-day line as well. At least while we're above the 50-day line, looking for quite a significant breakout after the extended basing and the bullish divergence that we've had. Could hit 25 to 30 pence, roughly the area of the 200-day moving average now at 28 pence. So something to look forward to there. If you're cautious on the stock, maybe wait for a break of that early March peak around 17 pence. But it looks as though with the near-term moving averages rising, the 20 and the 50, this stock is already on its way. Finishing off with a rather bizarre Twitter stock, I suppose, mentioned by a few Twitterati. Some people saying it's wonderful, some people saying it's horrible. You can do your own research on that, but at least while we're above the neckline at 35 pence for urban exposure, the technicals suggest that we could head back towards support on the way down, which is around 55 to 60 pence. Let's see who wins in that particular battle. That's it from me today. More updates on Monday.